right, so this is now 10 straight weeks that we've had a rally to the upside on a Monday, and based off what we talked about going into the weekend in last week's market outlook videos, this was the kind of bounce that we were looking for today, going into at least Friday's close. So it was a nice bounce. It was the exact kind of bounce that we wanted. It was improved breadth, but not strong breadth, and I'll kind of talk about what that means. Why? When do we actually want strong breadth and when do we not want it? And why? Why wouldn't a broadening trade be really bullish for the market? So that, as well as other charts that I think kind of stand out today, is what I'll cover in tonight's market outlook preview. So let's go ahead and get started. Today is Monday, November the 10th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, click this link right here. That takes you to our Market Outlook blog post, which you can see right here for free. You can get that for free. Everybody, all of our basic subscribers get it for free. Scroll down, you can see all the information you get. Basically what happened today, why it matters, what to expect going forward. That's all on today's blog post, as well as the video you're watching right now is always posted here every day. When you click that link, it will take you to this page. Because you're not logged in, you have to, if you're already a subscriber, just click the login here button down at the bottom. If not, click this join free button. It takes you to our basic subscription page, and you can see you can just subscribe right here. That's how fast it takes. It only takes a few seconds. No commitment required, no cost. And in fact, this link right here will take you straight to this page, and you can subscribe. And then, like I said, get this blog post for free every day. And remember, on Fridays, you actually get the full, on the blog post, you get the full version of the market outlook. So all of our basic subscribers get the market outlook full version for free every single Friday. All right, now let's take a look at what's going on today. As you can see, we had about as bullish of a day as we possibly could. A nice little rally higher. In the full version, I break down the market outlook charts, but needless to say, this is a really, really good bullish pattern. Just what we expected. If you watched the full version over the weekend, this is what we expected would happen. We were looking for this type of bounce to occur today, and it really did. A nice, good bounce. Of course, it was led higher by technology, which has been pulling back. It got a bull tag. In particular, within the technology space, the semiconductors up 3% today. So a nice move higher. You can see its market forecast, short-term sentiments bouncing. In fact, when you look at the RSI for the SMH, it was flirting with dropping below zero and negative 100 on the CCI, but right back up to pretty decent bullish levels there. So nice, good move higher. Of course, that had an impact on breadth. If I take a look at the breadth indicator here, let me pull up a ratio chart. And instead of looking at the Q's really rallied against IWM, but I want to look at the S&P 500 by itself. And you can see after a big drop on Friday, a nice rebound today in the S&P relative to the equal weighted index, which you can, a lot of people would say, well, we want the move to be broad. But remember, this ratio, which basically favors narrow leadership and not broad leadership, is 91% correlated with the S&P 500 itself. So when the market goes higher, we want it to be led higher by a more narrow leadership and not necessarily a broad leadership. As you can see, we've been doing very well here, and a nice, like I said, a nice good rebound here today. Breadth really improved. In fact, the McClellan oscillator turned positive. When you look at the McClellan oscillator here, it turned back to a positive number, so avoided dropping below zero so far on the summation index down there. When you look at the number of advancers relative to decliners, let's see here, right here, let's pull up, let's see, trend, and then we'll pull up advancers versus decliners. Big jump higher. Again, remember, I told you before that when we typically bounce off the lows, we really get strong numbers, like 1,500 or higher. Like that was 1,600. This one was over 2,200. This one was 1,700. So again, to only be at 1,000 is a little weak, right? It's a little bit weak. And like I said, that McClellan oscillator is not very positive, but it's, at least it is positive. So it's not the greatest surge higher. If you take a look at the new highs, we are back above the average. So getting to 150 is a pretty decent number, but the number of stocks above the 50-day moving average is still relatively low, still below the 50% mark and we're flirting with the moving average there. So it was a great bounce today, and the breadth looked better, but not quite what we want to see, at least for a bounce, right? For a bounce that we're indeed getting right now. One of the biggest movers on the day today continues to be gold. Gold and yields really have been kind of moving together. Nice bounce back up in gold today, up almost 3% over 4,100. And then when you look at that relative to the 10-year yield, oops, try that again. The 10-year yield. Again, it's off of its highs, but it gapped up quite a bit, and back above moving averages, so still kind of moving towards the high end of its recent range. So nice, good rebound in like real yields when you compare that to like the dollar, right? The dollar continuing its own little pullback, and of course, the other big news on the day today, so the other big technical sign from the day today that's really, really positive is the fact that we dropped back into bullish territory, into a risk-on territory below the 90% mark on the VIX. Still at relatively elevated numbers, but the VVIX is still relatively elevated too. In fact, the correlation is dipped below 50%. And again, in the full version of the video, I'll break that down a little bit more as well and what that means. When you look at the VIX relative to its own averages, we avoided getting above the 200-day, and we're back below short-term average values. So there's plenty of positive. It's not like an overwhelming positive, but there's plenty of positive lookout. And so in the market outlook video, I'll break down more what I expect the rest of the week to look like, and why, as well as give you our trade idea for today on a company that's been in the news. A significant news item, especially if you're a sports fan here lately, but has earnings coming out this week. So we talk about how to trade that. So there's our market outlook preview for today. Of course, if you want the full version of the Market Outlook every day, click this link right here. That takes you to our Market Outlook Foundation page. There you can get some more information on that foundation tier. It's just $29 a month. You get access to all the Market Outlook videos. You get access to all the trades that we do in each day in those videos. You also get access to the Market Outlook Live. We actually put the trade on before the market close during a live stream on our website. So we do that in real time. And we also manage the trades from start to finish in real time as well during that live stream. And then you also get access to our Market Outlook Live Trade Tracker, where we track the results of all those trades throughout the year. So again, just $29 a month, or roughly $1.40, a little less than $1.40 per video there. Again, thank you for watching. Subscribe to our YouTube channel down there. Click the thumbs up icon to like our video. The more you do those two things, it helps get our video out to all the followers on my channel. So thank you to those who do that day in and day out. Comment, share the video with anybody else. Follow me on Twitter at DavidSettle42 for more content between the videos. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.